And how are global investors sizing up this big rally that we've seen today? We've got Christopher Palmer, founder and chief investment officer at Benson Avenue Capital, joining us. He's joining us on the line from London. Christopher, thank you so much for being with us on the show today. What's your view on India?
Well, I mean, clearly the market bottomed earlier in the year at about 6,800 on the Nifty, and I agree with your other commentator today that the market is decisively broken out in Indian rupee terms. One of the reasons that I think this could be happening is that there's been a return of some inflation in India, food price inflation. Now, normally people would talk this as a negative signal, but this could signal that there's the return of some pricing power at companies, and perhaps signal the early starts of a new earnings cycle for Indian companies. It also doesn't hurt that today you've had some very big names, cyclical names in particular, come through with earnings reports, which I think will strengthen market sentiment.
Hi, Christopher. Thanks for joining us. But can something ugly on the global markets smother this rally? What are you expecting? I mean, in the run-up to the Fed hike, Fed meeting, as well, the 23rd of June, Brexit. Does June have too much that can wreck this rally?
Well, I think that the signals have become a bit clearer here in the United Kingdom that the odds are shifting dramatically towards a Remain vote. I'm neutral in this one. I can't vote, but as an observer, I can tell you that most of the polls and the commentary in the media would indicate that the exit camp is getting pretty nervous about their prospects. The second thing about the Fed's stance has become one where I think they've signaled to the markets that they would like to put one rate rise in before the end of the year to restore credibility. And I do not think that that's something which is going to upset the market. There was some instability around the fact that the Fed was thinking about a rate rise, but the market seems to be pricing that in fairly successfully now.
Christopher, yesterday we had Morgan Stanley upgrade the Indian market. I'm just wondering, because you did take note of some of the really strong earnings that we've got, particularly I think you were referring to Larsen & Toubro. Now, given the fact that this earnings season has turned out to be better than what one was expecting, do you see incremental increased allocation to India in global portfolios, or is it too early for that?
No, I think that that's fairly likely. I mean, what we're seeing in other stock markets, particularly G7 markets, is that the fundamentals are certainly turning lower for corporate earnings, and we're going to have something between -5% and -10% earnings growth, depending on which market you look at in the G7. And I think that will put a slightly better Indian market with some pricing power and some earnings growth. I think that could bode well for India's relative ranking amongst other markets. So, yeah, certainly you could see investors take a second look at India, which I think has been marking time for the last 12 months.
Right, Christopher, we'll have to leave it at that. Thank you very much for joining us.